Good afternoon. You're watching Your Stocks live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Patakia, and we'll have our experts answering all your viewer queries over the next 20 minutes. And, well, joining us today on the show are Astha Jain of Securities and Somil Mehta of Mirae Asset Sharekhan as well. Astha and Somil, good afternoon. Thank you for joining in. And the index, well, it remains quiet as quiet can be. There is no movement in the Dow futures as well. Of course, we are awaiting the all-important GDP data from the US at 6 o'clock this evening. So important macro data awaited, some important earnings awaited. We are also counting down to earnings on our own markets from stocks like Vedanta, from stocks like Indian Oil Corporation. Stocks like Exide have already reported results. The stock has fallen from the highs of the day as well. So a lot of stock-specific activity that's been ongoing, even though the index remains quiet. Of course, today is the weekly expiry as well, considering tomorrow is a holiday. So the expiry got pushed forward to today's session. But starting off with our viewer queries, then Prashant is writing to us from the Punjab, and he is holding around 25 shares of Infosys at 1400 rupees, and he wants to know if he should continue to hold on to Infosys or should he book his profits. Now, Astha, at least for large cap IT, the fourth quarter was a washout of sorts, if you could call it that. Would you say that the fourth quarter was the worst that you've seen for IT and things start to get better? What should one do with Infosys?
Hi, good afternoon to all of you. So with Infosys, I would like to recommend hold now. Why? Because yes, we have seen weakness in their Q4 numbers. And in fact, management has also given their guidance in which they were a little bit skeptical because of the constrained client's budget, as well as what they are seeing the weakness in some of their major segments. But I think going forward, maybe 2 quarters down the line, the company will be able to post a good set of numbers again. So whatever has happened, it is a matter of just 1 or 2 quarters. So in the longer term, we believe that IT companies are poised for a good returns again. So my idea here is to remain invested in this counter, although initial price target, which I would like to limit myself, is up to 1550 to 1570 odd levels.
Remain invested in these names. What about you, Somil? What are the charts indicating here? Is Infosys a good bet after the results, or would you find better opportunities in mid-cap IT?
I think overall, if I have to be taking a call on a IT sector overall, I think for some time IT sector is in the bear trend, on the downtrend, and in the medium term outlook, in the long term outlook, it looks a little bearish from here. If I'm talking about Infosys only, then the resistance is in the very short term. The resistance is around 40 daily moving average, which is 1550, and I'll be expecting previous swing lows to be retested, which is around 1300 levels. So my outlook for Infosys is bearish. Even in the medium term outlook, I don't see any a good rally on the upside. I'll be expecting a good downside for now.
Interesting. And moving on then, Gail is the next stock, and Susan Thomas is writing to us from Coimbatore, and she has 15 shares of Gail, and she wants to know if she should continue to hold on to these names. She's in the money, Astha, but at the buy prices of around 180. Is there an opportunity here in Gail, considering the valuations, the dividend yield, or there are other opportunities in the PSU basket or even in the oil and gas space for that matter?
I think if one can continue in the same space, then it will be a better choice with a price target of 200 to 210. Would like to recommend hold for Gail, because what we have seen is their volume growth was there, and definitely I think going ahead also the space as a whole will definitely post very strong set of numbers, and on that basis we are positive on this counter. I think right now Gail is looking decent to us. Remain invested in this counter with a price target of 200 to 210.
What about the charts, Somil? Gail or any other oil and gas name?
Gail looks great to me in the very short term, in the medium term outlook. High tops, high bottom formation, trading about 200 daily exponential moving average. At the moment, it is just consolidating in a very small range, but I'm expecting this range to break on the upside. The target should be around 213, which is the previous swing high, and you can keep a stop loss around 180 levels. Buy on decline should be the strategy.
Well, when Deepak is now writing to us from Mumbai, he has around 50 shares of KEC International, which he purchased at 700 rupees. Now he wants to know if he should add on to his positions. Well, not a significant move from his buy price, but Astha, for KEC International, slew of order wins. The company also surpassed its FY25 guidance. This infrastructure construction space, KEC International or L&T, which one would you pick?
So KEC International is also looking good to us. So I would like to go with both. But now, as far as KEC International is concerned, yes, you are absolutely right. Their order book is very strong, around 37,440 crores of order book. They are having right now. In fact, management has also given a very strong guidance going ahead. So I think this makes the case to remain invested in this counter. Although L&T is also looking good to us. If I have to choose between these two right now, I would like to go with KEC International. And here the price target can be set at around 800 odd levels.
What about you, Somil? KEC International on the charts?
I don't see much happening in this stock. It's been consolidating in this range for a little while now. It's been struggling to go above 20 and 40 daily moving average, which is a weak sign for the stock. But if it closes above 770, that's way above right now. 770 is a very crucial resistance. If it closes above that, then the next level would be 860 levels, and that would be my medium-term target.
860 is a medium-term target for KEC International. Hasn't done much over the last 12 months either. Now, Deep Shah is writing to us from Mumbai, and he has 6,000 shares of Aditya Birla Capital at 181 rupees. Now, he wants to know if he can hold the shares for 15 years and wait for it to become a multi-bagger. Asa, do you see prospects of Aditya Birla Capital becoming a multi-bagger in the next 15 years?
Yes, definitely. Why not? And 15 years is a long time horizon. So right now, I can say, yes, this stock has a potential to move upwards from here. Till what level? Maybe around 215 to 220 are my initial targets. Pardon me, these are very small targets I'm giving right now. But for 15 years perspective, definitely the targets will be much higher. But right now we are limiting ourselves to these targets. Now talking about this counter, what we have seen as, yes, their asset quality was like it was a strong asset quality which they have posted in their quarterly results. But there was a problem in the growth front, whether it is NIMs or RA I'm talking about. But their housing finance business is doing well. And in fact, the other segments of the company, like life insurance business, is also doing good. So I think overall, it is a good NBFC to remain invested in. And that is why we are recommending a hold with a price target of 220 to 230 at the initial level. But yes, for 15 years perspective, it can be a multi-bagger stock.
Interesting. What about you, Somil? What are the longer term charts indicating? Of course, I won't ask you for a 15-year target, but what are the charts saying here for Aditya Birla Capital?
See, in the very short term, I don't see anything happening here. I think it will consolidate around 190 and 200 levels. That will be a range, a trading range. And once it goes above 210, I think the next levels to watch out would be around 250, which is the previous swing high, which is close to the previous swing high. Medium term positive, short term positive. And I think you can definitely hold on with trailing stop losses.
Hold on with trailing stop losses there. A very long time horizon on Aditya Birla Capital, still down around 19% over the last 12 months. Take a short break, but just before we do that, here's some good news. Network 18 beats Times Internet to become the #1 news publisher on ComScore. Network 18 races past the Times of India to become the #1 news brand in the country. And that's not all. At the social plus on-platform leadership network level, Network 18 is the runaway leader as per the social plus MMX ComScore report for March 2025. With 315 million unique views, which is 55% more than its nearest competitor, Times Internet, which stands at 202 million unique views. News 18 also races ahead of Times of India in terms of social plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the ComScore report for March 2025. Now, as per the ComScore social media matrix report, Network 18 is 2 times bigger than the nearest competitor with a 54% reach within the the 389 million overall social population. And speaking about Indian languages, in terms of social plus MMX cumulative reach, News 18 Indian languages is the leader in the category with 182 million unique views as per the ComScore report for March 2025. Astha, Somil, stay on. We take a short break. We'll be right back with more queries. Welcome back. You're watching Your Stocks from the CNBC-TV18 Motilal Oswal studios. Astha Jain and Somil Mehta are still with us to answer our viewer queries. And the next stock on our radar is Praj Industries, and a viewer has written to us on that. And S. Jaikumar has 1,000 shares of Praj Industries, and a little out of money right now, is trading in the loss. Is the buy price is around 526 now. Somil, it's a big gash that you've seen on the charts today for Praj Industries. Would you use this dip, or should this gentleman use this dip to average his positions, or use any bounce to cut his losses?
I think use the bounce to cut any losses. I think from here in the very medium term outlook, 450 and below 450, 413 would be the levels I'll be looking for. The medium term trend is down, the short term trend is down, and I think any bounce should be used to exit the stock.
Any bounce should be used to exit the stock. 7.5% lower now for Praj Industries, the top loser on the Nifty 500. But what about you, Astha? Disappointing quarter that came in for Praj. The profits were down on a year-on-year basis for the third straight quarter. Margins are also narrow. There are increasing investments, but the management continues to remain optimistic on their new areas of growth as well. What do you recommend this gentleman currently sitting on losses on his positions on Praj? What should he do?
So management is positive, but what we are seeing in the result is a huge cut. If I talk about the bottom line growth also, it was a 62% degrowth in the Q4 itself that they have posted in the bottom line, right? And in fact, their valuations are also not very comfortable in the wake of kind of results this company has posted. This company is running at a price to earning multiple of around 40, 42. So still at a high valuation, and the kind of industry it is into, we are seeing some good results from the industry, other players as well. So in the wake of all these factors, I think right now, if one can take the risk for a longer term horizon, then only stay invested. Otherwise, I think exit can be a better strategy.
Exiting can be a better strategy than 7.5% lower for Praj Industries. Now, Kevin Shah is writing to us from Hyderabad, and he has 1,000 shares of Bandhan Bank at 144. Now, he wants to know both the fundamental and the technical views on the stock. Well, Somil still in the money. His stock at 165 now compared to his buy price of 144. But does the chart have the potential to retest levels of, say, 180, 190, maybe even 200?
For Bandhan Bank, in the last couple of weeks, we've seen a very good rally, and it's been trading above the averages. The momentum indicator on the higher time frame is on the buy side. The only hurdle probably from here is the 200 daily exponential moving average, which is around trading around 170, 172 levels. If the stock closes above 173, I think that will be the right time to buy the stock. For now, I don't see anything happening in this stock. However, if it goes below 154, if it comes down to 154, that will be a good buying opportunity. You can take that risk because it's been taking support at 20 and 40 daily moving average and starting the uptrend. So I think 150, 160 would be a good entry for the stock.
150, 160 would be a good entry for the stock. Of course, Bandhan Bank is reporting results today, Astha. And of course, one of the MFI players as well. What would you want to hear from the management, and what are the prospects looking like for this gentleman?
Yes, so in Q3 of their number, there was the concerns related to the higher slippages, higher provisioning, etc. So asset quality is a major concern because they have got the higher slippages in the MFI sector in the last quarterly numbers. So I would like to really see how they are working out with the asset quality, which is posing a major challenge to this bank. So all in all, because results are due today, I would like to wait, and I would like to recommend a wait for this counter at least till the results arrive. Meanwhile, if everything comes in place, then we are looking for the upward price target of around 180 to 190, but that are subject to the strong results which this bank can post. So all in all, we are right now in the wait and watch mode till the results arrive.
Conditional target from Astha. The next one is a retail shareholder favorite, and that is Yes Bank. And Preeti Rao is writing to us from New Delhi, and she has 100 shares of Yes Bank that she purchased at 50 rupees. Now she wants to know if she should continue to hold or sell at current levels. Somil, what are the charts indicating at 17 rupees currently is Yes Bank? 50 seems a distant memory now.
Definitely. I mean, it's in the downtrend for a very long time now, and low top, low bottom on the higher time frame. The momentum indicators, whenever it gives a bounce, it completes the entire cycle on the upside, and then it starts breaking the lows. So I think from here, I would suggest to exit this stock. There are very good private players like ICICI Bank, even Federal Bank. If you want to go for a smaller one, these stocks are looking good, but my suggestion would be to exit from the stock. I'll be expecting at least 15 levels or maybe below that as well.
15 or below that as well. But Astha, if I could take the liberty of using some Hindi, Yes Bank falls into one of those categories, right? Bhav kam tha to le liya types. But what would you say? The numbers were fairly good this time around from Yes Bank. But what should this lady do? Is a purchase price of 50 rupees?
Actually, yes, भाव कम था इसलिए ले लिया. That strategy never always work out to be in a better way. This is what we believe. What happened with this bank in particular? Yes, they have got a good set of numbers, but still, the GNPA ratio was almost the same. There was a slight improvement the NNPA ratio. So I'm not very much optimistic about the results, and that is why even we are also not very much positive about this counter. Now here the whole things come around the patience. If she has a patience to hold for a time period of 6 months to a year, then remain invested, because the losses can be huge if she exit at present point of a time. But still, I would recommend at least partial exiting from the stock is a better strategy, so that capital should not remain fixed in a one counter. And we believe that there are various other banks where she can deploy the funds in, and hence we are recommending partially exiting from this company.
Partially exiting from this counter. 17.7 right now is where Yes Bank currently trades. Well, Mayank Arora is now writing to us from New Delhi with an investment query, and he is asking which cement stock can be purchased right now for the long term. Now, Astha, what would you recommend from the cement space? We just saw numbers from Ultratech, from ACC, from Ambuja. A lot of the smaller players are still to report, but the ones that did saw a very big gash on the bottom line. How's the sector overall looking like, and what would you recommend from this space?
So we would like to go with the Ultratech Cement and Dalmia Bharat as of now. For Ultratech Cement, we have seen that the volume growth was good, blended realizations were high, and now the management has taken certain cost reduction initiatives, so that will also help the company in posting good set of numbers going ahead. So we believe that Ultratech Cement is one of the better choice in this space, with a price target of 13,000 to 14,000, followed by Dalmia Bharat. In the Dalmia Bharat, there is one thing, that it is one of the low cost cement producers that we all know, and the kind of initiatives, in fact, this company has also taken for cost reduction, that will help in increasing their EBITDA per ton by 150 to 200 rupees in the coming time. So I think both these counters are looking good to us in the cement space. In Dalmia Bharat, our target is 2150.
Interesting as well. Somil, which cement stock looks most attractive to you on the charts? What would you recommend?
Similar. Ultratech cement would be my topic from the space. In the medium term outlook, in the very short term, it's giving us small correction. However, in the medium term outlook, it has broken out of a good consolidation of last 6 months. And this consolidation, I think the next target for this stock would be 13,000 plus. I'll be expecting at least in the very short term, I'll be expecting this stock to take support around 11,400 levels and then again start the uptrend. So the support would be 11,400, and the next support is at 200 daily exponential moving average, which is around 11,100. Overall, buy on decline should be the strategy. 13,000 levels should be the target.
Staying with the industry leaders, both Astha and Somil. Now, Kashish Jain is writing to us from Gujarat, and he has 50 shares of Tata Technologies at 630. He wants to know whether he should buy more shares at this point. Well, Astha, the stock has seen a correction from its post-listing highs, but it is still remaining around its IPO price. What do you recommend for Tata Technologies?
No new buy. This is my clear advice, because what we have seen in the result is that there was a fall in the numbers due to the slump in the auto segment. In fact, the technology solution business is also not doing great to them. So we were not very much positive about the results, and hence no new buying. Right now, if anyone wants, just remain invested in this counter, because if I would say exit from this counter, then definitely the losses can be higher. This is what I believe, and hence just hold this counter, but no new buying at the present moment.
All right, Astha, Somil, thank you so much for sparing time and joining us today to answer our viewer queries. You can, of course, write to us and email us your queries, and we'll address them with our experts as well. But with that, we call time on this edition of Your Stocks from me and the team that put this show together. Thank you so much for watching. Just before we take your leave, a couple of stocks. Go Fashions is now up 13% after its results, and Exide is now at the lowest point of the day, down 4%. But for now, thank you so much for watching Your Stocks. Closing bell for the final 60 minutes of trade.